Good evening, everybody. It's starting to turn into spring here in Pittsburgh, but still a little bit chilly. Doesn't matter, because I'm not allowed out of the house. Because we're having the weekend, the 2-day training on the 4th and the 5th, we've been getting a lot of inquiries about the what's all involved with the T-line. So that's what we're going to be showing, is what is the purpose of the T-line. And here is what I consider the most powerful chart in candlestick analysis. The T-line and how does it relate to candlestick signals. And candlestick signals are the graphic depiction of everything occurring in human nature. No, I said that too quickly. Candlestick signals are the graphic depiction of everybody buying and selling, which is an indication of what's going on in human nature. The T-line is something that was brought to us by one of my first private training students that came down from Anchorage, Alaska, and we sat down for 2 days in front of the computer, and he loved candlesticks. And that was Rick Sadler. And about 6 weeks later, he called me up and said, take a look at the 8 exponential moving average. It acts like a natural support and resistance level. So the nice thing about candlestick charts is we know candlestick signals work, or we wouldn't be looking at them 400 years later. Whoops, maybe it's my sound. How's that? Does that sound better? So the nice thing about candlestick charts is that we know the signals work. Whatever else you add on the chart should enhance being able to identify when there's reversals and how long a trend's going to stay in progress. So it's the 8 exponential moving average, and we give it Fibonnacci characteristics, which is it acts like a natural support and resistance level of human nature. So this is why this is the strongest chart, or the strongest slide, because if candlestick signals are the graphic depiction of everybody buying and selling, basically human nature, and the T-line acts like a Fibonacci characteristic, acts like a natural support and resistance level of human nature, when you combine those two, you've got an extremely powerful combination. And that I attest to, because when candlesticks came along, it turned me around from being the worst investor in the world to where I wasn't losing money, and I was starting to make a little bit of money consistently. But when we added the T-line, it definitely started adding higher probabilities of being in the right trade at the right time. So, real quick, we're going to be going through the T-line rule this weekend. We're going to use the T-line rule to tell us when we're too far away from the T-line, which either makes a very good entry strategy or a good exit strategy. We're going to utilize the T-line to show us where we've got high probability trade entries, and we're going to go through some of these tonight, and when it's time to come out of a trade. We're also going to show how it dramatically improves the pattern identification, or the pattern confirmation. And most importantly, what most people get caught up in is when you use stop losses with the T-line, you get an extremely good advantage of seeing where you shouldn't be on a trade anymore. And then there's a little sidelight. When we use the combination of the 3 T-line in conjunction with the T-line, it kind of improves the probabilities that you're in the right trade or the right direction at the right time. So here's trend analysis. the signals, the patterns, where we are with the stochastics, using other indicators like trend lines, but most importantly, the moving averages. And those moving averages we're going to go through are the simple 200 and the 50, because every major money manager around the world uses those. I use now the 34 exponential. I did before, and when the market was trending one year where it was just consistently moving up, I switched to the 20 because the trend never came back to the 50. But the 34 works extremely well. And then the 8, the T-line, and the 3 T-line. So here is a very powerful concept of the T-line. The T-line works on all time frames, yes. Whether you're trading off the 1-minute chart, 5, 10, 15, 30-minute, or the daily, weekly, or monthly. So, moving averages act like magnets. Now, we can use the T-line as a very good trend source that, again, here's the 50-day simple moving average. The red is the 200-day simple moving average. That may have been done early enough that that's still the 20 versus the 34. But here is the basic concept. You can pretty much stay in an uptrend until you see a sell signal and a close below the T-line. That, and I'm indicating, or we're doing this because the probabilities. Oh, I don't know, Jim. I've tried to email him a couple times and haven't gotten it back. I think everybody says he's much better. The probabilities turn dramatically the other direction once you close below the T-line, and we'll show why that is true. So again, moving averages act like magnets. And why is that? Because if you're a major money manager and you decide you want to start buying this, and you get approval, and it's pulling back as a money manager or a trader or somebody putting on big positions for a firm or a hedge fund, where do you think it's going to be the safest place to start adding a position showing that you've reduced your risk? Obviously, when you get back here to the 50-day moving average. How about the 10 and 20 simple, which you can use whatever you want to. I mean, you can put anything you want to on there. As you can see, my charts aren't very cluttered because the main criteria is what is the signal, where is it occurring in stochastics. And you can see the T-line on here. So that black line is the T-line. So here's what improves your probabilities. Where do you think everybody is watching? They're watching to see what it does once it gets back to the 50-day moving average. Why is that? That's because everybody has the 50-day moving average on their chart. That is what makes the T-line so relevant, as you'll see in some of our live charts here in a minute, that nobody has the T-line on their chart. We have a much better perspective of what's going on in human nature based upon a very simple trading rule. If you see a candlestick buy signal to close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. With the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it, which tells you when you start seeing sell signals that far away from the T-line, the probabilities are pretty strong. You want to start taking profits because at least it's going to come back here. Maybe it's going to do a J-hook, maybe not. Why risk it? We can see exactly, or with much greater clarity, when to start taking profits. So the purpose of all this training is going to be that you're going to dramatically improve your trade probabilities by applying just the simple graphics of candlestick analysis with the T-line. Your two things happen. First, you don't get whipsawed, which means you're now analyzing things that improve the probabilities of being in a correct trade, number one. Number two, it keeps you from getting whipsawed out of that trade as long as it stays above the T-line. The gray line is the gray line. Well, that's the 20. I don't see, let me see if I can find the 3T line. No, don't even have it on here. And I may not even have it on the other charts. I'll find it. Okay, so with that, there are many things that we can identify, and they're kind of mixed up here because I just ran through the different charts. How close did I get that? I guess I could move this. Well, am I pretty much on the screen? Here, I can do this real quick. Close it, open it, and okay, I don't have this in order. So let's go right to the Dow. This is where being able to do trend analysis very simply using the T-line, we're using our candlestick signals, and look at our morning star signal, one of the 12 major signals. So if we have a major reversal signal and a close above the T-line, anything above that tells us we're trading in an uptrend. Well, what we saw yesterday was a bearish harami, not quite in the overbought area, but getting up toward the top end. But the fact that they did a bearish harami, which tells us the buying may have stopped, and they gapped it down below the T-line, you can only use one probability to make that a viable assumption. Whoops, I'm trying to see that. Which is the simple rule that if you see a sell signal to close below the T-line, you have to assume that you're in a downtrend. Well, today we did a bullish engulfing signal. Not quite in the overbought area. So what's that tell us about our trend? We've got to still see some more information, which means if they open this positive and start trading positive, what's it indicating? It's indicating they're confirming the bullish engulfing signal, and they're telling us the T-line's not a resistance. They're back up above the resistance, which means we might be looking at a little scoop-type J-hook pattern, which then means if the uptrend continues, maybe we're heading back up here. If this is wave one, wave three may be taking us up here. Now, on the other hand, if it opens lower and starts trading lower, what's that tell us? The T-line was acting as resistance and the sell signal was still in effect. So some people ask, well, what happens when you start seeing it waffle up and down above and below the T-line? That's not telling you anything. Yes, it is telling you something. It's telling you there's no direction to whatever you're analyzing. And that's what your assumption should be. There's no direction, so I might not want to be trading this or whatever trading entity. Same scenario over here on the NASDAQ. Whoops, I guess I can make this bigger yet. If it opens positive, we got kind of a J-hook pattern setting up. If it opens lower, we still may be heading down. So there are going to be times when you can pretty much analyze what happened to investor sentiment. Your best friend, gap up, Morningstar signal, close above the T-line. The assumption is pretty strong that you're going to be in an uptrend. There's going to be other times where you still have to wait to see what type of pattern and what they're doing at the T-line. So if you're trading intraday on the 10-minute chart, same scenario. And I'll get to that, Jake. Let me, once we have a close above the T-line on the daily chart, should we ignore the other time charts like the 10-minute until we get a close below the T-line? Let's see, I don't understand the question. If you have a close above the T-line on the daily, which assumes that you're in an uptrend, then you're probably looking at your 5 and 10-minute chart with a bias that is probably moving higher. On this one, is that a inside bar? No, that's a bullish engulfing signal. An inside bar would be what they call a harami, where it opens inside the previous day's close and closes below the previous day's open. That's one of the 12 major signals, which basically says your selling has stopped. Lindsay, what about the scalpers? I don't know what that means. The scalpers can be trading on, if they're trading on intraday chart. Let's just see what the intraday chart looked like. So here's your intraday 10-minute chart on the NASDAQ. So it looks like they started up, pulled back, they sold off. There's your bullish engulfing signal. There's your close above T-line. There's your uptrend. You can scalp, yes. This is the 10-minute chart, depending on the time frame that you want to trade. Here's the 5-minute chart. There's your Morningstar signal. There's your uptrend. So if I'm trading intraday, I'm usually using the 10-minute chart. And if I see a buy signal on the 10-minute chart, or if I see a potential buy signal on the 10-minute chart, I can flip down to my 5-minute chart and say, oh, what's going on here? Oh, I see a reversal, and if this continues, what's it telling me about the 10-minute chart? It's going to be confirming. So remember, the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. It doesn't matter if that time frame is a 1 minute, 10 minute, 30 minutes, or a daily, weekly, or monthly. It still illustrates the same thing. Okay, so that's how you analyze the market. Now, the first thing that you want to do, Don, I usually, if I'm trading intraday, I'm using the 10-minute chart as my bellwether. Then if I get ready, think it's time to get in, I'll flip down to 5 minutes. And then even on a 5-minute basis, depending on what I'm trading, if it's soybeans or cattle or hogs or something, the dollar, I'll get ready to buy, and then I'll flip to my 1-minute chart to make sure the 1-minute chart is still moving in the direction that is going to continue the 5-minute chart and the 10-minute chart formation. So right now, we don't know which way this market's going. We have to assume that as long as you haven't closed above the T-line, we're right now in a sell signal, gap down, in a downtrend. And that'll be pretty much evident in how they open the markets tomorrow. So obviously, if the markets open lower tomorrow, it's a pretty good indication that we're probably at least moving like this. If tomorrow we wake up and the pre-market futures are showing Dow's going to open up 400 points. That's a pretty good indication that we're now in a J-hook pattern, and we want to be more oriented toward the long side. Now, if the market opens flat, that's telling us a different story. That's telling us with this kind of indecision going on, you still want to have both long and short positions on. So let's kind of go through this. I'm going to go to the biggies first, the ones that everybody watches. NVIDIA. You can see how NVIDIA has flattened out on the stochastics. It did a doji gap down, but today it did kind of a bullish harami. So we don't know which way they're going to take this one. Now we do know that if you're going to trade NVIDIA, if it opens positive, you probably have a J-hook pattern because they're staying up above the T-line. So this is how you can do your analysis real quick. Look at our pattern right here. This is what we call a bobble. Came up, kind of failed at the 50, and notice where it pulled back to. And this is why I want to always point out, notice where it pulled back to. It pulled right back to the T-line, which is a level that nobody has on their charts, which means it didn't pull back to a level that everybody was watching. It pulled back to what would be a natural support and resistance level. The stochastics, my stochastics are 12-3-3 slow. And the use of the stochastics are that very simple Japanese rice trader's philosophy. If you see a bullish reversal in the oversold area, the probability is there's going to be a reversal. If you see a bullish signal in the overbought area, it doesn't mean very much. Same scenario. If you see a candlestick sell signal in the overbought area, it's more compelling. If you see a candlestick sell signal in the oversold area, it doesn't mean very much. So the candlestick signals need to occur in the appropriate place of a trend. Now, a lot of people will say, well, do we buy when the stochastics cross? No, we're just checking, using the stochastics to tell us whether we're in an overbought or oversold condition. Yes, Rick, the market could open positive tomorrow and then start selling off. So that's why if the market looks like it's going to open up, I mean, so many times they've had the futures up the limit at night. I don't know where right now looks like, no, I can't tell. That was, I don't know where the futures are right now. Can you show the stochastic indicator on the screen? Amy, I don't know what that means. It's on, oh, it's down 130, okay. Is yours, do you see the stochastics? You might want to expand your chart. If you go up to the top of your page there, that gray line that has, it's got one box that has the arrows pointing in, one box arrows pointing out. You can resize. Okay, there you go. Yes, that can happen on any given day. Rick, I'm going back up to your question. Can the market open higher and then reverse during the day? Yes. But what we're trying to analyze is where is the market direction based upon our candlestick signals. And right now, if it opened positive and then closed lower, still right around the T-line, it would tell us, they're having a hard time getting away from the T-line right now. It's a sideways market. Stochastics are 12-3-3. Yeah, closed. It doesn't really matter. You don't have to be that specific. All we're really wanting to know is, are we in the oversold condition or are we up in the overbought condition? Okay, so let's take a look at why the T-line becomes much more effective. If you go on a simple rule based upon the yeah, if the T-line's flat, yeah, that's telling you things are trading flat because it is a moving average. Now we're trying to see what the price is doing based upon the T-line. Why do your stochastic studies have 2 lines instead of 3? Sally, because it's, I don't know whether the 12 is, oh, I hate the answer to this because I don't know the answer. I knew the answer years ago. Now I just put it on there. It's just one is a slower than the other. So, yeah, there's only 2 lines, and it's maybe I think the 12 is based upon a 12-day time frame. Yeah, not most. I think all stochastics have. So you can put any time frame you want. Like you could do a 15-3-3, which would be a little bit slower, or you could put. I used to trade the E-minis off the 12-3-3 and the 5-2-2. No, you don't care about the crosses, Manny. We're not trading the stochastics. We're only using the stochastics to tell us where are we in our trend. And if we see a buy signal in the oversold area, that becomes very relevant. Which stochastic line do you, if you're below this line, right here, below 20, that tells you you're in an oversold condition. If you're above 80, you're in the overbought condition. Do you use the cross? No, I don't use that as a signal. The signal is the signal. So I probably should reiterate this very strongly. The purpose of candlestick analysis is the signal itself. That's your number one criteria. Everything else we add to the chart is just a confirming indicator. So the fact that the T-line, the 3T line came up through the T-line was kind of confirming the fact that we already saw our signal confirming. Doesn't matter which one, red or blue line. Yeah, we're probably making too much out of the stochastics. All we really want to know is, are the stochastics in the oversold area or in the overbought area? So you can use 12-3-3, you can use 14-5-5, you can use whatever you want. All you really need to do is sit down some night and say, all right, here's the bottom, and here, let's say up here was the top. What numbers kind of correlate with the bottom and the top? That's all I did one night, probably 40 years ago now. Oh, it can't be that long. You can try 8-3-3, whatever. Again, it's also going to be based on how active or how much you want to be in and out of trades. So, yeah, just take it for granted, and it doesn't matter. I use 12-3-3, and it's worked very effectively for the last 40 years. If you think you've got something that could be better, throw it in there. The nice thing about candlestick charts is this is what works effectively, the candlestick signals. They work, or we wouldn't be looking at them 400 years later. Everything else you put on your chart is just confirming or adding credibility to the reversal signals. Okay. Oh, we were doing the biggies. So if you're trading the big stocks, same scenario. You can trade them, and then look what happened to Apple. We had that shooting star doji gap down. That told us if we were long, we definitely wanted to be out on that gap down. When do we want to get back in? Long? Not until it comes back up above the T-line. Or, if this opens lower and trades lower tomorrow, that sell signal tells us we're probably heading down. Do you look at prices after the market, or is it better just to focus on before the market? just before the market, Frank, because prices could move all night long, up or down on news. But if Apple trades 14 million shares a day, it might be 30,000 shares at night that move it up or down. The important factor that you're looking for is where is it going to open, probably somewhere around 5-10 minutes before the market opens. Because at that point, you're going to be able to see what the futures are telling you, and then you're going to be able to see where they're going to be opening the stock. Any time before that didn't make any difference. So if you're looking at a chart like Amazon, the rhetorical question is, which way is Amazon moving right now? Probably pretty much don't know. So that's what the charts also tell you. Tell you when there's a good probability of a reversal or a sell, and there's a good probability you can't tell which way it's going. You move on to something else until this becomes more identifiable. Wouldn't that put us at the mercy of big money moving the market on purpose? They don't move the market on purpose. If you're coming in and your institution is buying 4 million shares of Apple, they're not coming in just to fool somebody. They're in trying to figure out how they're going to fill a 4 million share order. So, there's the money's too big to, the big money doesn't fool people, because remember, the big money is that somebody at Goldman Sachs gets an order from a major institution they're trading with, and they tell the trader, all right, we want to buy 4 million shares of Apple. That institution wasn't coming in to fool everybody. They're coming in because they've probably spent hours making a decision to start buying Apple. All right, so let's take a look here of how you use the signals or the T-line. We put a recommendation on Halliburton because we could see the signals, the dojis in the oversold area, followed by a gap up, your best friend. The reason we call that your best friend is anytime you see a doji, especially in the oversold area, followed by a gap up, not only are you going to be in an uptrend, but usually you're going to be in a pretty strong uptrend. So if you were buying in here, what was the element that kept you in this trade? They couldn't really close this below the T-line. Where was our likely target that we were anticipating? Well, there's a big gap right here. The gap is right here, so at least the first target could be going from our purchase price of around $6 up to the $10 area. Good percentage move. That was also the same rationale on our purchase of IMO. Now, the reason we were buying the oils was even before the price started moving on crude oil, they were buying oils. And when I say they, yes, this is recorded. Somebody was buying crude oil. Why? We may not have any idea, and we don't need to be analysts for that to figure that out. All we need to figure out is somebody that's done their research or their fundamental analysis is buying. We can see that in the graphics. Now, when we start seeing a bunch, which I guess we could get to, when you start seeing that they're buying the whole sector, what's that tell you? It tells you the big money's coming in across the board and they like the oil stocks. So the best place or the safest place to be is in oil stocks, because if the market is starting to head back up or not, I think I've got API on here somewhere. Yep, it's down here. But just simple logic says if you can see a whole industry being bought, that means somebody out there, meaning the big money, is starting to buy that sector. So how do you put all your stars in alignment? you pretty much analyze which direction the market's going, which sectors are acting the strongest, and then analyzing which stocks in that sector is acting the strongest. That basically puts all the information in your favor. So here's Appy, another one that did a left-right combo, and one of our top-ranked signals of doji followed by a bullish engulfing signal, and look where it occurred, right smack dab off the T-line. The top of the chart is cut off. Sally, is that on your screen? Anybody else having the top of the chart cut off? Phil, it's very simple to analyze, and we'll do that on our scanning evenings. But a lot of the softwares, scanning softwares, you can analyze individual charts, but you can also analyze the indexes, or you can go to the sectors. So, for example, try to think what they have on Thinkorswim. On TC2000, I can go to the Morningstar industry groups, and I can scan those just like I would a stock, which stocks or which sectors are acting the strongest. Then I can go to that sector, and I can click on that sector and see which stocks make that component which stocks are in that sector that make up that sector. Candle after a doji or the one after. Now your left-right combo is right here. Doji followed by a bullish engulfing, and so now the next thing is that you want to see bullish confirmation. So if you see bullish confirmation, what's that telling us about this little pattern? Looks like a J-hook pattern setting up. If this is wave 1, wave 3 should be bringing you back up into this area. They don't trade futures on, they don't do TC2000. I think it's just basically the major U.S. exchanges. Let's see. So that's just kind of additional confirmation. If you see a whole sector moving up strong and providing good signals, here's Devon Oil, or Devon Energy with a gap up. Notice what it did. It was indecisive right here along the T-line. And when they gapped it up through the T-line, it gives us a completely new message. They've made their decision. Now we look to see what's our upside potential. Probably this gap area, which means first want to see what happens here at the 34 and see if it gets up to this level. There's another little gap right here, which would coincide with the 50-day moving average. We've been buying, we recommended Halliburton over the last few days. And we also, I think, I can't remember whether we recommended, was it IMO, within the last couple of days. Because of the bullish engulfing, here's that simple philosophy of the T-line. Not quite a bullish signal, and notice what happened when it got to the T-line. Didn't do anything. So here's an observation that I'll jump off a little bit. But if you see a reversal, a signal, that's not quite a hammer signal, that's not quite a signal, that tells you watch to see what happens when you get to the first resistance level. This also works for Forex. Works for anything that has fear and greed in it. This is our signal. There's a big bullish engulfing signal, and where did it close? Just above the T-line. Stochastic's coming up. So what's our confirmation? Well, if they open positive the next day, what's that telling us? Telling us they're confirming the bullish engulfing signal and telling us the T-line's not going to act as resistance anymore. Would you also use Fibonacci? Yes, you can use whatever you want to say, all right, What's my upside targets? Well, maybe I put the Fibonacci retracement numbers on here. Let's just use that point, down to that point. Now I watch to see whether this level or corresponds with the 50% up here or this level. Not I think it's going to go there. I just watch to see what type of signals it does once we get to those levels. Remember, this is the important part, analyzing what the investor sentiment is doing. The next part is watching to see what happens once it gets to one of those levels. Okay, we got to get moving here. Schlumberger, another one that just closed at the T-line today with a little kicker type signal, where it opened here, closed here, gapped up and went the opposite direction. If you're trading this, if it opens positive, you want to be buying because it's telling you the T-line is not going to act as resistance anymore. The candlestick signals are the top criteria. You could take everything off the chart and you trade reasonably well with the just the signals. You'll trade immensely better using the T-line on here also. But it doesn't really matter, Pat, what he tweeted. All it really matters is what are they doing with crude oil. So you can see right here, we had a doji, bullish confirmation. What's our new assumption? Assumption is we're in an uptrend as long as it stays above the T-line. What's RJO? I trade futures too. Unfortunately, I'm kicking myself because look at what was happening in the futures of hogs. And the reason I had gotten ready because I thought the market itself that's not what I want. That's not right. LHAJ. There it is. There was a left-right combo. Closed below the T-line. Down the limit. They opened it up the next day and went down the extended limit. Went down the next day down the limit, but did kind of an inverted hammer, which meant the buying was coming back in. Opened positive, went up the limit. Think that was up the limit. Then look what happened up here. There was your left-right combo in getting up toward the overbought area. A left-right combo is one of your most powerful reversal signals. And then the next day they took it down, closed right here on the T-line. When they opened it lower, they went down an extended limit, down the extended limit. So 1,700 margin requirement for a contract of cattle probably produced over $10,000 worth of profits over the last few days. That's only if you didn't leverage up as it was heading down. So we will be doing a session on futures real soon. Here's your soybeans, and look at the soybeans coming off the Morningstar signal, up, 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 and then where did it fail? Right here at the 50. How could you tell it failed? Hanging man, shooting star, hanging man, spinning top, lots of indecision. Where was a good place to put a sell stop? Right below the lows, because logic says if they couldn't get through the 50 and came down through there, they were in a new trend. And what was the overall trend? Looks like it's a slow drift in this direction. Anyways, we will do a session probably on a Wednesday night on how to trade the futures, because this is where candlestick analysis was formed in the first place, with trading the most boringest commodity in the world, rice. And I always point out that the Japanese rice traders did not become wealthy trading rice. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries. Can you talk about leveraging up a bit? Generally, what are you thinking when you're doing it? Why would it be better than just buying a bigger position to begin with? Because let's say you don't have a big account. And we're getting way off track. We haven't even gotten started on the T-line. Well, let's say I have a $7,000 trading account, and I'm just picking out. And I go ahead and I buy or I it opens lower after left-right combo. I use part of my $7,000 to go short, and it goes down to where I'm up $1,300 on the day. Well, now my account's worth $8,300. So maybe I add another account or another contract if it opens lower the next day, and it goes down expanded limit. So now my two contracts pick up $3,800. So now my $8,000 account is now $12,000. So I add a third contract, and so I've got three contracts now produce a $6,000 profit. So now I'm up to $19,000. So as I'm leveraging up, adding more positions, it's because each day my account balance is getting much bigger. Yes, you can trade futures and TOS. That's why I use TOS, because I can trade stocks, futures, options all out of one account. Okay, let's get back to some of the obvious how we use the T-line. So there's my strong signal, close above the T-line. How long do I stay in it? As long as it stays above the T-line. So you use it for trend analysis. There's doji, 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 gap up. Notice what this signal looked like. Opened here, closed here. When it gapped up, look where it went to, right to the T-line. Now, what do we know about the doji rule? It's going to move in the direction how they open after a doji. So if it opens positive, what can we assume? It's going to trade positive. If it trades positive, what type of signal do we have? This is our bullish flutter kicker, which is one of your strongest reversal signals, because if you took out this little flutter, you've got a kicker signal, which is one of your strongest reversal signals. So basically, when you see a doji closing right on the T-line, and you use the doji rule, that if it opens positive, you can be buying immediately because you know it's going to trade positive, and it's basically telling you the T-line's not using or not acting as resistance anymore. Okay. I'm trying to... Phil, when I started learning... you could also suddenly lose your money in hog futures and or whatever futures you're trading. So, for example, look at these. These are days where they open up the limit and they're stuck there all day. So let's say, for example, you went short right here, and then it went up the limit and you couldn't get out. So let's say your $7,000 account now is down $1,200. The next day they take it up. It looks like you had time to get out But let's say you didn't get out, you're still stuck in it. Next day, you're still stuck in it. You might be down $12,000 out of your little $7,000 account, which meant that ate up your $7,000 plus $5,000. So that's the risk of futures. Now, very rarely do you see a time frame like this where you see it keep going up and down the limit. Maybe you see that once every 2 or 3 years. Do they respect stop losses? No, not if you, let's say you wanted to stop out and they gap it up here. There's nobody, you're trying to, you're short, so you're trying to buy and they gap it up here. That means they've already bought to the limit and nobody's willing to sell you anything, so you're still stuck in it. All right, let's get back on track here. We did Hasbro. We've got charts like this where you can analyze the pattern. You can see where this is what we call 3 white soldiers. I'm just pointing this out because you don't see 3 white soldiers very often, even though it's a reversal signal. And what about the T-line? MT, that's what we're getting to. 3 white soldiers, a strong bullish signal. And then look at the pattern. If you took profits right in here, you can see the rounding action that was giving you kind of a J-hook pattern setup. Because it's staying above the T-line. This is an important observation. If you see a pattern setting up, like a J-hook pattern, you're getting an additional confirmation based upon the fact that it's holding the T-line and is creating a pattern. The probabilities are you're getting ready for a next wave to the upside. Even more specific, the bobble pattern, which is your kind of your J-hook pattern or your T-line crunch. Look at what the T-line crunch was doing right here. They couldn't close it below the T-line as they were crunching it up into the resistance level of the 50. Then they did a doji sandwich breakout. What's that tell us? Probably wave 1, wave 3 is now in progress. That same scenario was pretty easily seen in this one, a bobble breakout. And why could we get ready for the bobble breakout? Notice what was happening right here at the T-line. They couldn't close it below the T-line. So all the T-line helps you do is identify a pattern much more distinctly, definably. How about that? So if you were buying this right here, how long would you stay in this position? Until it closed below the T-line, or the further away you move from the T-line, the higher the probability it was going to come back and test it. So on a day like that, if I saw it closing as a doji, I would have closed out half the position. Why? Because we're already alerted to the fact that we're way too far away from the T-line. If you've been seeing some of the trainings here recently, we had that same scenario right here about a month ago when Tesla just started running like a scalded dog. And up here, what was it telling us? Where do the Japanese rice traders say where do most people buy? They buy exuberantly at the top. And how can we tell graphically it's exuberantly at the top? Well, first of all, we're in the overbought area. Now look at, they're starting to gap it up, and they're starting to trade big. Then they gap it up again. So where did some of the people in our options room take their profits? Up here, because if you're that far away from the T-line, what's the next exercise? You flip to your 10-minute chart, and as long as it stays above the 10-minute chart, you stay long, but you keep setting your stops below the T-line on the 10-minute chart. Yes, zoom, let's see, I got to see where we are on some of these. All right, I'm probably mixing some of these up, but they all have examples. Now, look at what happened on Tesla. last couple of days. Look at your kicker signal, back below the T line. Remember what one of your strongest signals are, the kicker signal. So it came up, came back to the T line, looked like it was going to do a J-hook pattern. But what completely reversed that? The fact that they gapped it down and went below the T line told you two things. One, you definitely wanted to be out of any long positions. And two, you now wanted to consider going short. Yeah, now it's back up here close to 500. I think it was, somebody said it was up around 50, 70 points. The T line is the 8 exponential moving average. Yes, but you also remember where it's trading right now doesn't mean a hill of beans. Wait to see where it's trading 7 minutes before the market opens. Because where is the pre-market futures right now? Or the aftermarket futures? CB, they said they put out 88,000 cars when they were expected to put out like 79,000. The Dow's down 170. If we wake up tomorrow and the Dow's down 450, you might see Tesla down here somewhere. Okay, let's see. I can't remember which ones I've done. So here's that 3 white soldiers again. 3 white soldiers is a bullish signal because you have an up day. Then they open it lower and take it back up. So you had some profit taking, but they still bought. Open it lower, some profit taking. But what did this day tell us? They did a buy signal up through the T line. Now you watch to see what happens here. And if it gets to that level, you watch to see what happens up here. FTI. Just the simple factor that they did doji, little best friend gap up, tells you exactly what your probabilities are now, that you're probably heading up. And this also makes for very simple stop loss procedures. If you're buying based upon a buy signal and a close above the T line, where would you not want to see it close? If you bought here, you wouldn't want to see it close back below the T line. So why don't you enter along? Because I may not have even seen this today. Didn't see this until we did our scans after hours. So again, we're not trying to anticipate a signal. We're looking for the signals, and that was the signal. At what point above the T line does a stock start reversing to the T line? That's up to each individual stock. Once again, the further away you move from the T line, very simple trading strategies using the logic of candlestick signals. If you're buying down here, look at your fry pan bottom breakout. Good move, but getting a little bit excessive. And they open it up here and start trading it up. What's the logic of a stop up here? You put your stop right here below the open because logic says if something's good happening, they're going to go this way. If they're exhausted, it comes back down through the open, you want to take profits. Because where's your next likely target if they're selling it off? Back to the T line. Now look what's happened on this one. Look at our little morning star signal off the 50 up through the T line. And there was our double doji yesterday, which is consolidation. And then they opened positive. So what do we do with this position? Right now we just stay long as it stays above the T line. Okay, that was, here's another one that we recommended because there's one of your 12 major signals, a morning star signal. What do we want from a morning star signal? Bullish confirmation. So we could be buying on this day. because what would this be telling us? With the Morningstar signal closing right at the T-line, if it opened positive, it's telling us it's confirming the Morningstar signal and telling us the T-line's not acting as support. As resistance. So how long do you hold on to this one? As long as it stays above the T-line. Now, there was days that it looked a little bit iffy, but the last criteria is as long as you don't see a sell signal and a close below the T-line, the probabilities are greatly in your favor. Maybe it's me. Voice in and out. Yes, Don, we'll get to those here in a minute. All right, let me run through some of these real quick. There's your best friend signal. Observe the obvious. Bunch of indecision, and now they've told you their decision. Try more upside. That's BGNE. TME. Again, the reason I point this out is this is not rocket science. This is just very simple analysis that you're using indicators that work consistently for centuries. That's human nature. Then you use the T-line to confirm that. So anytime I see a bullish signal, kind of a double bottom on TME, finally closed up above the T-line, means that the bulls have taken control. I think AGO is one of the silver. I must have done that one wrong. So I will speed on to the next one. These don't even look familiar. All right, so if a signal looks like a good signal because of its movement through the T-line, a lot of people are watching INO. So what's your assessment on INO? Brian, I see your answer. Sideways. So who's in control, the bulls or the bears? Neither. So you don't even pay attention to this chart. Now you can watch it because it's kind of a wedge formation, but you don't do anything until you see a bullish signal. So we were watching Lake because Lake did a bullish engulfing. Now did a doji. So it didn't execute today. But if it opens positive, what's our trading rule about the doji? It's going to move in the direction how they open it, which is already starting to move in this direction. Yes, I'm getting to the shorts here in a second. So here's another one. There's our little cradle type pattern. The cradle pattern is a big headboard, a little indecisive bed, and then notice your third day or your footboard with a little hammer gap up. Now how long do you stay in this one? Until you see a sell signal and a close below the T-line. So if you're sitting in a situation like this, there's your doji right on the T-line. How do we assess this? The doji rule. If it opens lower, you close it out immediately. If it opens positive, you should be looking for a J-hook type pattern. Now, if it opens positive and it's kind of moving up and down, where do you put your stop? Right back here, because logic says if it opens positive and then comes down through there, it's creating a bearish left-right combo. You don't want to be in that trade anymore. Okay, we were making some good money on ATI. There was our bullish doji harami gap up. So this is one of the things that we look at. Look at the magnitude or the distance we were away from the T-line when we saw our buy signal. Buying on the next day, even if you're a day trader, where was your first logical target? Probably heading toward the T-line. Was it going to get there in one day? Didn't necessarily need to, but that was a good target. Then it closed up above the T-line. We're in a good bullish trade until we see a bearish doji harami. And then where do we want to come back out? We want to be out of this trade when you see it trade back below the T-line or close below the T-line. CMD also had been acting well. Kind of the same scenario. There was your cradle pattern. Traded up above the T-line, but gapped down yesterday. It should have been closed out. When can you buy it back? If you happen to see another buy signal and a close back up above the T-line. And Zoom, we were running into trouble up here. Kind of a bearish belt hold meeting line. And then your doji. Where was the support level? The T-line. However, when you saw it open lower and start trading down, what type of signal was it forming? A bearish doji sandwich and a close below the T-line. First of all, you had a bearish signal, the bearish doji sandwich. And secondly, you were closing below the T-line, making it much more compelling that there was a sell signal. You definitely wanted to close this one out. That was the same scenario on Luckin. They couldn't get back up above the T-line. You shouldn't have been long on this so that you weren't in a situation like that. So, again, I keep pointing out this through the years. I've looked at this stuff, and I keep telling people, this is not rocket science. The probabilities are going to work dramatically in the favor of seeing a sell signal and a close below the T-line. That puts you in probabilities that tell you you're not in an uptrend anymore, probabilities that you're heading in a downtrend. So, does every signal work? Obviously not. Same scenario over here on CPT. Good example. There's your bullish harami, doji. If you were buying with the first target being the T-line, when it came up through, you could still be buying on positive trading, but where would you close this out? When it closed back below the T-line. Just keeps you out of trades that aren't working. Now, I'm showing you trades that aren't working because to be a successful trader, you need to know when the trade's not working and get out immediately, just as well as you need to see which trades are working and continue to stay in it. So often I hear people say, well, I see the charts and I'm getting into the trades and I'm just not making any money. Because a lot of people don't know when to come back out and go on to the next trade. So just as easy as far as finding bullish trades, it's just as easy to find bearish trades. LVY. You can see where the reversal was. There's your hammer, bullish engulfing, doji sandwich, working until right here. That doji gap down told you immediately, especially with stochastics starting to roll over, that you should close out the trade immediately. Now what do you have? Prospects of a bearish J-hook pattern that either will stop down here or could go another wave to the downside. Now that also will be a function of what the overall market is doing. You can also analyze which sectors are not doing well. Our recommendation to go short on coals was based upon a failure up here when notice what this signal was. This is not a signal. This is just an up day and a downtrend. Now what does an up day and a downtrend tell us? There's probably going to be some upside, but not with the same strength as if this had been a bullish harami or a bullish engulfing signal, because if this was some sort of relevant reversal signal, the Japanese rice traders would have had 400 years to tell us what this signal is, and they don't mention it. Now, I've seen recently where people say, oh, this is one white soldier. I was studying candlesticks 40 years ago, and I never saw them mention one white soldier, and I scoured the signals. So this is just an up day, a non-reversal day, just an up day in a downtrend. Notice what happens when it gets to the first resistance level. They fail. And here's real quickie. Notice what happened here on the 3T line. The 3T line never got up through the T line. So what type of pattern setup do we have? We failed this level. Good prospect of heading much lower. That's Art. That's the one thing that you hear every money manager tell you is cut your losses short and let your profits run. But I've never heard and I listen. I've never heard a money manager tell you how you cut your losses short and let your profits run. So here's one that we recommended going short on today. Didn't do a whole lot, but look at the reversal. Long-legged doji, finally a close below the T-line. Then we had your best friend selling, and remember what a best friend does. It tells you there's a lot of force going in that direction, but it did a doji today. So what do we do with this? If you see this open lower tomorrow, you start shorting immediately because now you got a best friend followed by a bearish doji sandwich. Did I do CNK? Yeah, same scenario here. When a stock goes below the T-line, do you immediately go to the 10-minute chart to see if you should get out or wait to the end of the day? Depends on what's happening with the market, Lou. This one closed back below the near the low end of the range. Coles closed near the low end of the range. But remember what the market did. It closed up 470 points. So I want to wait to see what happens to the day. Now, if I got scared and thought, well, the market's moving up and my short position on Coles, I better get ready to cover it because it might support here. No, I wait till the end of the day. So I have a very simple philosophy. If you're buying based upon a candlestick daily signal, you sell based upon a candlestick daily signal. The Japanese rice traders say everything in between is just noise. The two important factors is where did it open and where did it close? Guess I can make this bigger. And TPX, did we just do this one? TPX, same scenario. Or did I do that? Should I? The other one, I don't know why I picked two that have almost the same symbols. TPR, same scenario. If this opens lower tomorrow, after your bearish best friend, if it opens lower, what's it telling you? You've got probably a bearish doji sandwich. What's it telling you about this level right here? It's not acting as support. Brad, yes. Amy, hold on to your individual ones until I tell Jim to do the double line, which is going to be way late tonight. Yeah, today it looked like a bullish engulfing signal. But what do we know about the signals? We're right here in the middle of the range. This may just be an update. Just because it looks like a signal doesn't necessarily mean it's a signal. What should be our major assumption right now? As long as we haven't closed above the T-line, we should assume that we're in a downtrend. If you're in an uptrend, now I put in my stops. That's a whole different session. Let me see if I can find one to illustrate that as we go through some of these. Now I forgot where I am. If I was long Netflix and I saw a sell signal, but it's still above the T-line, yeah, I'll probably put a stop just below the T-line or just below today's open. Because if it comes back down through there, what's it telling me? They're probably rolling over my stochastics and they're confirming the sell signal. So the place that I put stops, I'm trying to think of something that moved up steadily. I might, on this day, when it opened and started trading positive, I put my stop right there. This day, it opened, starts trading positive, I might put my stop there. Someplace where if it came back and started creating a red candle, I want to put my stop. Now, some people say, well, we've been told that you should put your stop at 3%, 5%, 7% loss. The non-rational logic to that is the market doesn't give a hoot where you bought. What we're analyzing is who is in control, the bulls or the bears. So there's a bearish engulfing signal. Opened above the previous day's close and closed below the previous day's open. You can also see you've got kind of a minor resistance level. Down through here. So there's a sell signal, but it didn't close below the T-line. But if it started coming back down and trading back below this level, yeah, that's kind of telling me my bearish engulfing signal is now starting to take effect, especially with the starting to roll over the stochastics. CPRI, another one. This is where, look at our kicker signal that closed below the T-line. So this is the thing that has just made me a ton of money, or at least saved me a lot of money. But anytime I see a signal and a close below the T-line, not only am I out, maybe I'm watching to see which ones to go short, and on my scans I see the kicker signal. I know that if it opens lower the next day, I could be shorting. Cindy, hold on to your individual ones until I tell Jim to do the double line. So we know that the airlines are selling off. Once again, look at what happened. Indecision, trading below the T-line. If I see that, and it's an indecisive trading, I'll wait till the next day. I traded positive, but look where it closed, right smack dab on the... So I've got a sell signal. There's my bearish left-right combo. Now I'm trading below the T-line. Either it's doing a J-hook pattern or it's still in a downtrend. When it gapped down yesterday, that pretty much told us they aren't going this way. They're going this way. Same scenario on Delta, sitting right here on the T-line, gap down. So the T-line acts as a very strong indicator of which way investor sentiment is going and gives you a much more clarity of the type of pattern. Wave 1, wave 2, starting into wave 3 to the downside. Any advice for option traders on a lot of your recommendations? I try to keep my recommendations to the, if I'm doing a recommendation in the options room, ones that have stocks that have big volume. Because the lower the volume, obviously the lower the volume on the options, which means the spreads are a little bit bigger. Let me finish this one, Steve, and I'll continue. No possible double bottom. Dr. Cookie, what was that on? So here's the same scenario. We did a doji today on Planet Fitness. If it opens lower, what do you got setting up? You've got your bearish best friend now being followed by a bearish doji sandwich. That tells you there's going to be a lot more force. Oh, double bottoms? It could be, but you're still a good distance away to find out whether that would happen. So even if you shorted this and it showed support right here, that's still 6 points away on a $23 stock. That's pretty close to a 20% downside just to find out whether you're going to support there or whether you're going into wave 3. Hugh, the scanning on Thinkorswim is a little bit more difficult, but we have our formulas already in Thinkorswim, so you can find the major or the 12 major signals there, and then we have a package for some of the higher probability or what we call the top rank signals and patterns, like looking for the left-right combo or the best friend. We've got that at a discount on our website that you just download it into Thinkorswim, and then that's all you have to do. Now you just go scan for them. So obviously there's a lot of stocks that are producing excellent short positions. So the reason I usually tell people to have both long and shorts is if we don't know which way the market is going, we don't know whether it's going to do a J-hook up or whether it's going to continue down, but we know there's stocks right now that are trading positive, so you can have long positions on no matter which way the market's going, and you can have short positions on no matter which way the market's going. I think I've got one more. This is Shoe Carnival. There's your evening star type signal, and you can get ready to short this if it opens weaker because you have a bearish doji sandwich. So if we know that the cruise stocks are getting set up to, there's a Carnival. If it opens lower, what's it doing? It's breaking this level. It had kind of almost a kicker type signal, starting the downtrend. It could be going much lower. I don't know how much lower it can go. Royal Caribbean, same scenario. And look at your shooting star, your doji, your gap down on Norwegian cruise lines, and look at your stochastics heading back down. If they break this level, they could be going lower. So you got Carnival that's going south. So kind of figured if you have Shoe Carnival, I figure that must be a cruise line where you float around in big shoes. All right, so if you've got, which we do, the scanning capabilities of finding the best on any given day, you can find, even on a lousy day, you're going to find 10 good longs, you're going to find 10 good shorts. So from that point, you want to find out which ones have the best longs and shorts, which is we can utilize the T-line to enhance which ones are going to act the best. So this is why we're doing the 2-day training. If you're not familiar with candlesticks, it doesn't matter because what we're doing is we're kind of working backwards. Our basic 2-day training, we start with the doji, go right through all the 12 major signals, which is your bread and butter of candlestick analysis. Then we do the patterns. And then we do the top rank signals and patterns. Now what we're doing on the 2-day Triple T training is we start backwards. We show the relevancy of all the signals and patterns at the T-line, how you can greatly enhance your entry and exit strategies. Even if you're a day trader, you've got situations where you can see what the setup is. For example, if this one opened lower tomorrow, I would expect the magnitude of the move to be like this. That means you can pretty much day trade that to the downside all day. So there's our special for the 2-day training, which for non-members, it's $497. For members, it's $297. So here is the tricky part for the non-members. Is you're better off signing up for $97 to become a member for 30 days, and then get the price for $297, save $100, and still get 100 or get a full month of seeing what we do each day in the chat room. See how we where I put out 2 or 3 stock picks each day, and usually once a week, if not twice a week, which is because of us being stuck in the house now, we try to have maybe a Tuesday and a Wednesday night session where we go specifically into scans, how to set up your scans, how to set up your stop losses, your entry and exit strategies. For option traders, we do show how spreads are more beneficial. So you get a lot of extra education, and it's basically like tonight where we sit here and we go through an hour of how to set up for entry strategies or when to take profits. Oh, the ships are very small. Okay, maybe it's. Do you have butterflies? No, I've never been nervous doing this ever. I mean, do I do butterfly spreads? Probably 70% of our trades are either debit spreads or credit spreads. We don't. What you'll find out, Roger, on our site is everything is kept as simple as possible. Our analysis is simple. Our trading strategy is simple. We don't want to be spending 45 minutes, an hour each night trying to set up trades. In our options room, which is separate from our main room, we have, because of the different terminology over there, we just go through what strategies would be the best for each price pattern. Kevin, I'd say I didn't answer your question. If a stock doesn't have big volume, and I say doesn't have big volume, usually under 600, 700,000 shares a day, the options volume gets a little bit lax. But if the bid is $2 and they're asking $2.40, I'll put it in at $2.20 a bid, and I'll let it sit there for 5 minutes. Now, probably about 80% of the time they'll hit you just like that, probably within seconds. But if it sits there for 5 minutes, that gives me a little bit of a warning that maybe there's not enough volume in those options, that you're probably going to be more at the mercy of the market makers. If I really want it, maybe I move my bid up to $2.25, and if I let it sit there for another 5 minutes. If it doesn't execute, I just pull the bid, because the whole point of investing is to make money. And if you can't buy something where you're going to make money, go on to something else. There's always more trades out there than you're ever going to be able to handle. Is the option room included in the 1-month membership? I don't know. Cindy, I don't know, but if you sign up, anybody that signs up and they request a 1 month tryout to the options room, I'll probably tell A to go ahead and let that happen. Okay. Does a breakout of a wedge have to be based on a signal, or is the breakout the signal? The breakout is usually the signal. What were we looking at today? Or at least you could probably look at something like INO, that you can see kind of a wedge. You'd like to see a signal breakout, but you don't have to. Which was the other one? Don't tell me. I'll find it. No. I'm getting closer. I'm getting closer. Bah, humbug. I know why, because it's closed out. Yes, GR, you'll get a recording. If you don't, just email Abraham at Candlestick Forum, and he'll send you the link. If you logged in on the what was it? T-line 42, I think you get the link automatically. Okay, I can't remember which one was a wedge. Oh, it's coming to me. Nah. I can't remember. You can look at the open interest. Now, sometimes, depending on how many options you're trading, if you're trading 20, 40, 50 options at a time, then you want to look at open interest, which is usually means you're going to stick with the big ones. Yeah, not quite. That's more of a rounding bottom. Oh, darn now. I can't remember which one it was. But it crashed either yesterday or today. I'll find one. But, so that was a long answer to say, yeah, that was kind of a wedge formation, but this happened to have a buy signal. So this is what I call convergence analysis. You're in the oversold area. You're trading right on the 50. You do have a little hammer signal. 2 days of indecision. A strong move to the upside off the 50, doing a morning star signal, closing above the T line. The more aspects or the more features you can put into your visual analysis, the higher the probability it's going to confirm that you're now in an uptrend. Yeah, but Luckin didn't have a wedge, or not one that you would really identify. I'm trying to figure out which one it was. Anyways, we'll come across it. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Okay, let's see if X-Airs had a good chart. Yeah, so there's kind of a little wedge. And then you saw the bullish signal breaking out. So you stay long, except you've done a doji. You're up here in the overbought. You put your safety stop just below today's low. Grubhub. That was that one you get ready to go short. Your doji breakdown. First target should be down here at the 30. Gold has been acting pretty good. Notice how it supported right here on the 50, the 34 and the T-line, and now bouncing back up. Marna, you stay long, look at your bullish engulfing signal off the 34. There's your doji sandwich. Notice the consolidation. This is why you want to know your signals and how or what nature they are when they're developed. Indecisive, 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 decisive, more upside. So you stay long on this one. Nugget. Just starting to come back up. So now it's very simple. If it opens positive tomorrow after your little best friend signal, that tells you they're probably breaking out, and that kind of looks like a wedge formation. And TZA, you're up above the T line just barely. Notice where they consolidated today, right back to the 34. So this is where you get ready to buy, especially if it comes back up through today's open. What did I do? TZA. Micron, that's one like all of them right now where it's trading below the T line. It had an up day. Now you have to see whether they're doing kind of a little scoop type pattern with your flat handle scoop, or if they open it lower, they're still trading it lower. United Rentals needs to open positive and trade positive. Again, there's your morning star signal with the best friend. Your criteria is you stay long. This is where I would have a safety stop just below today's low and or the T line, because that would tell me they're moving in the direction of how they open it after a doji. Uber is a good short, yes. You can short this one on weakness. There's your bearish best friend down through the T line at a failure of the 34. This one had a little bit stronger in the fact that it did come back up through the T line. So once again, you need to see how this one opens. If you're thinking of going long, you can buy on positive trading. If you buy on positive trading, you just make sure it doesn't close back below the T line. And CTS, that was a good positive open right on the T line and trading positive. You just stay long on this one. ExxonMobil, also a good looking chart, also came back up through the T line after doing this kind of little rounded bottom J-hook type setup. And notice where it traded as a low today, right on the T line. And I point that out once again because nobody has the T line on their chart. You'll be surprised how often a price will support right at that level, or how a price will come up and resist right at that level and start trading lower. This one you get ready to go short if it trades weaker. This is one of a few energy stocks that doesn't look like it had a lot of strength today. So we did gold. Gold was trying to do a little, looks like a scoop type pattern. Intel, another one that didn't show off with any great dramaticism. It opened and immediately started trading positive. So if I was going to go short, this is where the candlesticks make it a lot more clear. When it opened lower, you could see that the buying was occurring because you could see a little green candle. Where would you have shorted? If it came back down through this level. Where can you go long? Now, if after a left-right combo, it opens positive, making the 50-day moving average a likely target. The Russell, still below the T line. Assume you're in a downtrend. AMGN, big left-right combo. Not a very good-looking chart, not going anywhere, but I would definitely be a buyer kind of on a fry pan bottom if it broke out through the 50. Let's see, did I skip some? No, we did gold, we did Marna, we did, well, Kershaw. Did do that. We still want to stay short on Carnival, especially if it opens lower. Want to stay short on Royal Caribbean, especially if it opens lower, giving you a bearish doji sandwich. Norwegian, Another one that you can go short, except they're getting down to rock bottom. Hyatt, notice where it came up to today. Right smack dab to the T-line and sold off. That gives you additional evidence that they aren't taking it up. You can short this one. Gold is doing a little scoop pattern, which is a little flat handle, then the scoop. Now usually the handle is a little bit more than that, but the bullish Harami told you the selling had stopped. The gap up today told you not only had the selling stopped, but the buying has started again. And GDS, that's a toughie, but as long as it stays above the T-line, you stay long, which means if I was long, I'd probably have a safety stop just below today's open, because if it comes down through there, it's telling me they did hit a resistance level and they're not staying up above the T-line. DK tried to trade up today, but closed near the low end of the range. However, you still watch to see which way they open this. That's a long-legged doji. If they open it lower, not only is it going to be trading lower, but look at what your trajectory is doing. It's kind of disappearing. Yes. So here would have been another case that if you were trading it active, as soon as it got up here and it looked like it was stalling out, you could have flipped to your 10-minute chart to see what to do. Well, we can do that. 10-minute chart. So it looks like they slammed it up. And then look how far away you were from the 10-minute chart. That told you they were probably bringing it back down, which they did. And they kept it down all day. So if you see it run up like this, and you're thinking, well, maybe it's time to get out up here, take a quick profit. Now you flip to your 5-minute chart. And maybe you set your stop right here on the 5-minute chart. That would have told you if they came back down through there, they were probably coming back down to the T-line. Clovis needed to open positive and trade positive. So you can stay long or you can think about buying this one on positive trading. Red Robin, you can go short on this one. There's not much room left. So you're more than likely coming back down to this level, which would still give you about a 40% downside. Cisco, did we do Cisco? It looked like another one. If you happen to have stayed long, or if you're thinking of going long, you can buy this one on positive trading coming up through the 34. I think we did we do F5? Another one you can buy on positive trading, but you want to make sure it stays above the T-line. CTXS, that one we did, yes. And APT is above the T-line. It's trading right. Here's another factor of the 3T line. If they're staying above the 3T line, obviously they're staying up above the T line, which is a little bit stronger indication that the bulls are still in control. If I saw correctly, it looked like they were trading it back up about 60, 70 cents after hours. So I would still assume one of this stock being kind of in the limelight, it's still moving up. Marvell, another one that can be bought if it comes up through the 50. And Space, you stay short. And you can see the resistance at the 34. Now, people ask why the 34 versus the 20. The 20 works well when you're in a trend. The 34 seems to work relatively well. I say relatively well. The major signal, the major moving averages are the 50 and the 200. And then the 34 is kind of a secondary signal or secondary resistance support level. We did delta. Delta, you stay short. AMAT, stay short. Notice where it came up and failed today, right at the T-line. That's that much more evidence that the bears or the bulls couldn't move it up through that level. AUDC, look at your long-legged doji. This is why you want to recognize your signals. You stay long as it stays above the T-line. And BGS, the bigger the signal, the more compelling. Now this is kind of your bobble breakout, so you stay long on this one. Blue apron is not a bearish engulfing signal because it's not below 20. Correct, but it's not a good strengthy signal. So you still need to see this open positive and trade positive. If it starts trading lower, that tells you this whole trend is kind of fizzling out. SGG, yeah, I don't have volume on here, but from what it looks like, this is a very slow volume stock. Is that the sugar index? Yeah, so if you're thinking of buying this, if it opens positive, notice when they took it up, there's lots of profit taking. If they take it up again, that means the profit taking is over. Let's see, work. Stay short. Notice your bearish doji sandwich, and if it opened lower tomorrow, pretty much obvious that the 50 is not acting as support, so you probably have a trend channel setting up, bringing you down into this area. Zoom, I'm suspecting is heading for the 50. If it opens lower, I think they'll probably bring it back down to this level, which would coincide with the 50-day moving average. Citigroup, right now, that's kind of a bearish chart. But what usually happens, and this is what I'm suspecting might happen on the Dow, you have a bottom, they take it up, and this is what we call a stutter step. They bring it down and then do another buy signal and start taking it back up. So it's like a double bottom, except this doesn't get to that same bottom. So I'm kind of anticipating that might be what's happening on the Dow. But this was your bottom. This is your stutter step. Now you watch for the next buy signal. So this is the dollar. It's coming back up. Yeah, I guess the dollar's backed off. But right now it looks like the dollar is starting to head back up again. Why would you not have been out of gold 3 days ago? You probably would have. But then the next signal is a bullish harami, which tells you the selling has stopped. Now you want to think about getting back in it again. So just because a price moves against you, you look at what the signals are. In this case, there was no signals until you got down in this area. There's your inverted hammer. In this case, you've got a pattern setting up. So if you got out here, you saw the bullish harami the next day, you get ready to buy back on bullish trading from there. VTR. Kind of the same scenario. You stay short, but look at your bullish engulfing. Watch to see if they don't do another bottom here pretty soon. But right now, I wouldn't be long. Microsoft, that stayed up pretty strong. Microsoft's hard to trade other than trading the options. But as long as you stay above the T-line, you stay with it. And Tesla, we did. Right now, you probably should suspect that it could come back down to the the 50-day moving average, or whatever the next move. This is the crude oil prices. So you can be buying on the basis that crude oil right now is trading at 24.18. It's down a little bit, but it was up $5 today. But same scenario. It looks like it came back down and used the 3T line as support. So you might suspect that crude oil is going to start back up again. If you're in a trend, you'd be consistently above or below the T line. If you see the price comes back to the T line, is that a good time to enter into a trade, assuming there'll be a continuation of the trend? I would rather wait to see if that trend is going to confirm by seeing what it does the next day, that it's trading positive. What are the basics of a bobble? A bobble is a J-hook pattern, more defined, that it hits a resistance level, usually pulls back to a support, which in most cases it's the T-line, and then comes back up through the resistance level the second time. If you took out that resistance level, in this case the 200, you've got a J-hook pattern, but if you can see what the resistance and the breakout level is, we call it more of a bobble because we can see how it bobbled below it and then started back up again. Steve, right now you don't try to assess anything being correlated with something else. Boy, Dan, I've got a smorgasbord there. We'll do a couple of them. CNQ, you stay long, use today's low as your stop. Kroger, you can be buying this one. It's not very exciting, but it looks like this is your support level, and this is a prospective target at the top of that wedge. And GM, stay short. JD.com, wouldn't be long or short this one, no direction. Fitch, stay short. The SPY, right now, got to wait to see how they open this one tomorrow. LIVX, I probably wouldn't be long or short, just no direction to this one. Your belt hold worked until you saw it close. Now you don't know which way it's going to go. I'd have my money elsewhere. And Penn, stay short. Notice how it used the T-line as a resistance level today. And Stanwood, I'd kind of watch. I wouldn't be long, but I'd start watching for maybe a double bottom down here. Uber, we did. Just stay short. It's a bullish engulfing signal, but it's really just doesn't tell you very much because we're still below the T-line. We don't know whether this is a bullish signal or whether this is just an up day in a sideways market, because you're not in the oversold area, which is where a bullish engulfing signal would become more relevant. LYV is a short. You could still probably short this one on weakness with the expectation of at least coming down here or here. But if I was shorting tomorrow, I'd just have a safety stop at today's open, which would also probably be where the T-line had come to. And BF, or B, what I just typed, PBF, nothing yet. Yeah, nothing until they get back up above the T-line. Okay, we are still probably going to see some choppy market, and the choppy market is much more difficult than not too distant past, where the markets can move 200 or 300 points in a matter of 5 minutes, one way or the other. So lots of movement still out there. But the important thing for tomorrow, based upon the T-line, is if it opens lower, got to assume the T-line is still acting as a resistance. If it opens positive, now we've got kind of a little scoop pattern setting up. Okay, with that, we're going to be going through all this stuff in great detail on Saturday and Sunday. It's going to be figure on 9:30 to 4 and then 9:30 to 4. We're going to go through the whole gamut, but we're going to be using the T-line as our kind of lead-in top indicator, and then show how everything works. Dramatically improves your probabilities of being in the right place at the right time based upon this indicator. I've invested for, I hate to think how many years, 40 some odd years, and the T-line is probably the most effective indicator that you're going to come across. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.